Hey, it's John Lee Dumas of EO Fire, and it's The Entrepreneurial You, the show for dedicated and passionate Caribbean entrepreneurs seeking daily inspiration, brought to you by author, speaker, and award-winning entrepreneur Heneka Watkis-Porter. You must be prepared to ignite.
As an entrepreneur, you have to be okay with failure. If you're not failing, you're likely not pushing yourself hard enough. Alexa Von Tobel. Greetings. What's up, my peak performers? Welcome to episode 106 of the Entrepreneurial You podcast. I'm Heneka Watkis-Porter. My guest today is Tom Ryan, general partner at Start 100. Now, Tom is an experienced startup founder. He's an investment professional and distinguished coach and mentor to entrepreneurs worldwide. So in addition to Start 100, Tom is currently an entrepreneur in residence at Catawba Valley Community College and the founder of entrepreneurial support resource community, supportedly.com. So we are going to be talking about crowdfunding, a viable alternative to traditional startup funding. Welcome, Tom. It is so good to have you on the Entrepreneurial You podcast.
Thank you. My pleasure.
Absolutely. Have you ever had any Jamaican food?
Oh, yeah.
Yeah? What have you had?
Absolutely.
Talk to me about that.
Oh, my goodness. There's always, the jerk chickens and that sort of thing. I live in Asheville, North Carolina, which is in the mountains of Western North Carolina. And we're just really very spoiled with tons of great restaurants. So there's one of my favorites is called 9 Mile, and it's kind of Caribbean inspired food. So lots of rice, lots of fish, lots of incredible dishes that they put together. So yeah, big fan.
Okay, awesome. So you kind of have a taste of Jamaica, literally, huh?
Yeah, absolutely.
All right, let's move into talking about crowdfunding. And, crowdfunding has in recent times come on the scene, as it were, as an alternative to how people source capital, funding for their startup. So let's start by talking a little about what crowdfunding is, and then we can talk about why it should be considered a viable alternative for startup entrepreneurs to consider.
Yeah, absolutely. So crowdfunding effectively is just crowdsourcing. At the root of all crowdfunding is the phenomena of crowdsourcing. So yeah, it's been done for years and years and years, but through the advent of technology and social networks, and this kind of connected global ecosystem, we're now able to have the ability to gather the crowd to support initiatives. And those initiatives could be, funding related. They could be philanthropic, as in the case of a GoFundMe, which is a crowdfunding platform of sorts for philanthropic needs. But when we get to the actual business financing side of things, crowdfunding effectively is, platforms. They are platforms that are designed and dedicated to trying to get your message out around your business or your concept to the broadest possible audience and to get their support. So in effect, that's what crowdfunding is at a high level. When we get down to the use of crowdfunding for the financing of your business idea or your actual business, then there's two big buckets of crowdfunding. There's the rewards-based crowdfunding, which is effectively a pre-sales endeavor or effort. And then there's the equity crowdfunding, which has been a more recent development. And those are two very, very different things that a lot of times what I find is there's a fair amount of confusion around those and what their specific purposes are. So folks, it's kind of ubiquitous. They just think of crowdfunding as either the Kickstarters, the Indiegogos, that sort of thing, or they think about it as an equity crowdfunding platform. And there's two very different purposes. They perform different jobs. They're not for every company. So understanding that distinction is really important.
Interesting. So you've touched on reward-based crowdfunding as well as equity-based crowdfunding. Now, of course, my next question is distinguish in a more detailed way the difference between the two and which is more appropriate, as it were, for a startup to consider.
Yeah, absolutely. So I'll start with rewards-based crowdfunding because that's the most popular. So that's your Kickstarter, your Indiegogo type campaigns that you see out there. They have the most, kind of the broadest awareness, and really their principal function is market testing, and it's a go-to-market channel that's become available that companies that are early in their life cycle can get out there and get exposure to the market. But the important thing to understand about rewards-based crowdfunding like Kickstarter and Indiegogo is that it is a pre-sale platform. So what you're effectively doing is you're pre-selling your products on the platform. You're not raising equity capital in your business. So you're not fundraising in the traditional sense. You're actually selling product on a pre-sale basis. And that's an important distinction because there is no, a lot of times I'll have conversations with folks and they'll say, oh, well, if I support a Kickstarter campaign, what do I get back in return? Like I'm investing in a company and, what's my position in the company? And in those instances, the folks who are asking those questions really don't have a clear understanding of the purpose of a rewards platform like a Kickstarter or Indiegogo, because it is effectively you are pre-buying, you're pre-ordering a product that is oftentimes not commercially available yet. So the exchange is Heneka, you've got a product that you're looking to sell and you want to get to the market. I like your story. I like your product. I want to support you. So my support comes in the form of pre-purchasing your product. And what that does for the entrepreneur is a couple different things that are very beneficial. Number one, it provides market validation at a certain level. So if you have the opportunity to kind of tell your story and pitch your product to the masses, you're going to be able to find out what kind of attention you're going to receive or what kind of support from the market. What's the demand going to be like? And those platforms provide that opportunity to connect, to do kind of a customer discovery initiative at a higher level where there's real consequence. The consequence is that you're either going to pre-sell a product or you're not. So it's a great market validation instrument and exercise. And then when successful, it's a great source of cash flow that's non-dilutive to the entrepreneur, meaning that, if I sell a product for $100 and my cost of goods is $50, and then you back out, the fees that are associated with participating in those platforms, I might have, some gross profit or some free cash flow of maybe $35 per item. And that's a great source of cash for young startups that they don't have to give anything away and they don't have to pay back in the form of like debt or something along those lines. So the rewards-based crowdfunding platform is very easy to get into. It can provide great marketing validation or market validation. It can provide free cash flow. And it's a great opportunity to just build awareness and exposure for your brand, for your products. It's limited to product companies. It's not something that it's not for everyone. It's not for every startup. And with our fund, the Start 100 fund, we focus on mass appeal consumer products. We get a lot of applications for software companies and apps and services and things like that. But because we leverage crowdfunding platforms, and particularly, the rewards-based crowdfunding platforms, we say no to all of those applications because they just aren't good fits for a rewards-based crowdfunding platform like Kickstarter and Indiegogo, because that's not where you would go to support an app or a business-to-business software application.
Mm-hmm. So, right, we're going to talk about, because you haven't really touched on the equity crowdfunding just yet. You have given us a lot for the rewards base, which is great. And I also want to touch a little on Start 100 and how, as you said, you're a product-based facility. So we're going to also want to get into that as well, share how a startup may come to you and what you'll do for them in terms of going forward. Now let's look at the equity-based crowdfunding alternative.
Yeah. So the equity-based crowdfunding is the smaller of the two buckets, and that's specifically designed to be able to raise capital for your business, typically in exchange for equity. Although in some cases it doesn't have to be equity; it could be a convertible instrument like a convertible note. But effectively, you're doing the same thing. You are offering something, in this case, an investment opportunity to the crowd, and you are being able to, kind of the power of incrementalization. You're looking at, okay, a one-to-many situation, whereas the typical financing route, when you're raising equity capital, is going out there talking to a lot of investors, starting with friends and family, and then going to maybe accredited investors, and then maybe going to angel funds, and then ultimately to venture-backed sources or traditional, debt, lenders and that sort of thing. And that's a very long process, and it takes a lot of time, and the odds are relatively low that you're going to have success with every person that you talk to. So crowdfunding, equity-based crowdfunding, provides an interesting alternative in that you can put this message out. And again, like rewards-based crowdfunding, if you have a compelling story and your product or service is interesting to people, and you can tell that story, kind of broadcast that story effectively, to the masses, then chances are you can get a lot of folks that are going to be investing smaller sums. So that's one of the big benefits of equity crowdfunding is, done properly, you can get a lot of folks that are saying, I really like your story, I like your products or services, I like your business model, and I'm going to, invest a small amount of money in your business. Then when you get to kind of some of the larger, more macro level benefits of equity-based crowdfunding, it kind of democratizes the venture investment game for non-accredited investors. And what I mean by that is there's certain regulations that here in the United States are put forth to protect the financial institutions, not just at an institutional level, but protect the flow of capital and regulate the flow of capital. And one of those instruments is the accredited investor requirement. So you have to meet certain criteria in terms of annual income, net worth, things like that. The point is that most fundraising that's done at a beyond a friends and family level, or just kind of a one-off, any type of professional level fundraising, typically requires that you're only receiving money from accredited investors. And what that does is it really limits the pool of folks that you can go and raise money from. What equity-based crowdfunding does now is that it allows, more non-accredited investors to participate at lower levels. So what the government has done is they've said, yes, non-accredited investors can invest, but they can only invest, below a certain point. And so you're talking, small checks, $1,000, things like that. But if you can get those small amounts from a lot of people, then you can accomplish your goal of raising a significant amount of money to launch your business. And then the last thing that it does is that it builds a great fan base. So the folks who invest in your company now become fans, and you can leverage those fans to continue to grow and spread the word about your business.
Absolutely. I love that. Such, we have much to, regurgitate and contemplate. So can you talk to us a little, Tom, about, we don't want to get into too much of the history, but it will help to create a picture and a background. So a little of the history of crowdfunding and where we are now and what has been the success rate over the years.
Yeah. So the history of it, crowdfunding has been in operation in some way, shape, or form since kind of the late '90s, early 2000s. It started with the rewards-based crowdfunding because that's frankly a lot easier. There's no regulation involved. It is truly a marketing campaign, if you think of it that way. And incidentally, too, the significance of being effective at the marketing side of crowdfunding applies equally to rewards-based or equity crowdfunding. Success is one of the biggest success criteria or determining factors of success on either one of those platforms or buckets is your ability to tell a very, very compelling story to a lot of people. So when I talk about what's kind of the secret to success around crowdfunding, regardless of whether it's rewards or equity, it really comes down to the marketing to be successful. But yeah, so the history of it is that started in the 2000s, started on the rewards-based side, and with the success that was generated by actually being able to go out there and get the crowd to support you at this level, then there obviously the focus shifted to how do we use this to be able to raise capital rounds. And so that's been the most recent addition. 2012 was really when the first platform started to emerge. That came from some legislation that was passed in 2012 called the Jobs Act that the Obama administration passed, which put forth the guidelines that platforms that run equity-based crowdfunding campaigns operate within.
You've pretty much alluded, to the answer to the question I'm about to ask, which is how do you really gather the crowd? You hinted earlier at marketing, but just give us a little more insight into really how can we gather the crowd? Because, it's crowdfunding after all, right?
Right. Yeah. And I can't understate this or overstate this enough. I don't want to understate it. I can't overstate this enough. Marketing is essential because what you're really equity-based crowdfunding and rewards-based crowdfunding success depends on eliciting an emotional response from the crowd. So it's imperative that you're telling a very, very compelling story in a way that creates this emotional connection to the founders, the brand, the story, and the products. The products are very, very important, or the services, but they're only important once there's that emotional kind of buy-in from folks that are viewing the campaign. So if you look at the way that crowdfunding, an equity-based crowdfunding campaign operates, or a rewards-based crowdfunding campaign operates, a lot of times there's a high emphasis on the video. Video is the medium that is really used, or the principal medium that's used to kind of convey this message and make it very compelling and create this connection between the viewer and the companies that are behind these campaigns. So, when I started to really get involved in crowdfunding was by supporting some Kickstarter campaigns and Indiegogo campaigns that just got me. It was something that I cared about. It was a product that was not just really cool or really useful, but it was the story of the founders and what they were trying to do, and the very sincere ask around, with your support, we can make this happen. So my recommendation to any entrepreneur that's considering crowdfunding on either one of these, the two options, is to really start to develop that clear and compelling story that really motivates people, inspires people to want to follow you and get behind you. Mm-hmm. And there's a lot of resources available. You can, if you're clever at doing that, you can do that yourself. There's marketing agencies that focus on this exclusively. But then it's beyond that. Once you have a great story to tell, then it's building your base. So a lot of times folks look at that as a very intimidating type of step where, oh my gosh, how am I going to go out and get 100,000 people to follow me? And the answer is you don't need to start with 100,000 people. But what you need to do is you need to start with your close circle. And that could be 50 people, that could be 100 people, that could be 200 people. In the case of a startup where you have, and hopefully you have multiple co-founders, if you sit down and on a whiteboard or on your computer and say, okay, who do we know? Who's in our close circle? Who would follow us because of a personal connection that we have. And you'll be surprised when you go through that and you list that out, you'll find that, oh my gosh, I've got 100 people on this list that are in my close circle that I can personally reach out to and ask them to support me, in this campaign. And that's one of the critical first steps, is making sure that you have that base, because then once you have that base and you ask them and they agree to help support you, then you can get this exponential effect where, you ask them not just to support you, but then to also spread the word. And that's also the power of the crowd operating as it does, where, it kind of catches fire and there's a viral nature or viral coefficient that can be tapped into there to be able to really expand the reach. So number one, it's your story. Get that story correct. Get it really compelling. It should motivate people to want to support you and follow you and help you. And then number two, it's really establishing that close circle. When we look at a prospective investment and we start evaluating what we call their crowdfundability, that's one of the key things that we trigger on is, what's your story? Does it move us? And then number two, what does your fan base look like? And if you haven't built your fan base yet, then you're probably not ready to jump into either platform.
Mm-hmm. All right. So now let's turn our attention to Start 100. Just kind of take us through what it is that you do and how you can facilitate the effective launch of a startup.
Yeah, absolutely. So Start 100 was established to solve, a pretty important problem that we saw in the market of both, a lack of funding for hardware startups effectively, and also a lack of time on the part of the entrepreneurs that were busily working to try to develop their company and develop their products. So we saw that there was a real gap there. There's some white space in the market where, your typical startup that was trying to produce a consumer product that was, pretty detailed, pretty tricky in nature, that there wasn't a lot of funding available for them. And they were very, very busy trying to, create their product, work through their production, chains and their supply chains and their engineering and everything else. And it was one of these things where the idea of commercialization was always on the list of things to do, but there really wasn't a strong plan for how do we actually take this product to the market. So what we decided to do was to create a fund that focused on mass appeal consumer products that had high growth potential, and that ideally were solving really important problems in the world. And partner with those companies to provide them with capital, in the form of some prescriptive financing and for specifically for enabling a crowdfunding campaign, but then also provide them with an awful lot of expertise, both on the product and engineering side and production side, but principally on the marketing side, because a lot of times product-based startups, their domain expertise is largely centered on product-specific things and not so much on the marketing. So the way that Start 100 works, we have a first level, which is our prescriptive funding, and that's a $50,000 investment. Those funds are used to support a Kickstarter campaign or an Indiegogo campaign, so a rewards-based crowdfunding campaign. So the $50,000 breaks down by a bunch of different categories, but the largest category is paid advertising. So our portfolio companies, we partner them with a leading crowdfunding agency called Aventus Partners, based in Charlotte, North Carolina, and they're one of the top companies that are out there that are partnering with companies that either want to do rewards or equity-based crowdfunding campaigns and really get that story to the level where it is compelling and it's eliciting this strong support. And then also they have a terrific formula for going out there and actively marketing the campaign so you get the greatest reach. And a lot of that these days comes down to paid advertising strategies. So you have to leverage social media, you have to do it in the right way, you have to do paid ads on a consistent basis, be able to test the results of those. So you can imagine if you're a startup founder and you're in the process of trying to get your product finalized so you can take it to market, and now someone says, oh, by the way, I know you've considered going, the crowdfunding route. And if you're going to do rewards-based crowdfunding, which is a pretty good thing for you to do if you're a good fit product-wise for their platform, now you have to invest an enormous amount of time to learn how to execute on these strategies, these best practices, in order to have significant success in your crowdfunding campaign. And that's a huge distraction from the business. So in addition to providing the cash to be able to do that, because you have to have money to do the paid advertising, and obviously it's in your best interest to retain the services of professionals that do this every day, now you have to carve out a ton of time to be able to focus on it. And a typical rewards-based crowdfunding active campaign cycle is 30 to 45 days, which a lot of times could be just a complete black hole, with founders having to pay attention on that. And you really put a lot of time into that every single day, which takes a lot from the business. So Start 100 solves that by saying, okay, we'll provide you with the capital to be able to have the money for the paid advertising, to retain the right agencies, and we also do a 1-week boot camp in Charlotte where we bring folks in on a cohort to cohort basis, and they work actively with our advisors, with Eventus partners, and with others to not just refine their message and address maybe some of the more critical areas of their business model, but then also start to work to build out that campaign so that they're really ready to launch and do it with a lot of success.
Wow. That is absolutely fantastic. Do you only support companies that are US based?
We only support, they have to have a US based entity. So we do look, we'll take applications from everywhere, but one of our requirements is that it is a US based entity that we're investing in. Absolutely.
Understand that. Tom, oh my gosh, this is just so much good stuff right here. So much good stuff on crowdfunding. Now, I'm going to take your final sentence and just to remind my peak performers that you have been listening to this episode with Tom Ryan. We are talking all things crowdfunding, as you, of course, would have picked up by now. And Tom, just go ahead and leave your final statements, to the entrepreneur that is seeking to look to crowdfunding as a viable alternative. And also at the end, give us your contact information.
Absolutely. So if you are a product-based entrepreneur that you are in the process of developing a mass appeal consumer product that is a great fit, you believe it's a great fit for Kickstarter or Indiegogo, and you've thought about that, and you may or may not understand that that's going to require a lot of time and capital, and you're not sure where you're going to find either one of those, then we highly recommend that you check out start100.com. And look at partnering with us. We look for highly coachable, motivated, dynamic founding teams that are really trying to develop products that address some of the biggest needs out there on a global market basis or market scale. So we would love to talk to you. We've got an application process. Our next cohort, we're opening up applications for our next cohort in February. So we'd love to start the conversation.
Absolutely. And that's Start 100 as in the numeral 100, start100.com.
Correct.
Awesome. What an amazing time I've had with you, Tom. I appreciate you coming on. I value your time, and not just your time, but your expertise. So I appreciate it and thank you.
It's my pleasure.
My peak performers, thank you so much for tuning in to this episode with Tom Ryan. I really do look forward to connecting with you next week. So in the meantime, I have some information that can change your life for the best. LeaderCast, the largest one-day leadership event in the world, is happening at the Knutsford Court Hotel in Kingston on May 10. LeaderCast Kingston will bring experts such as Gail King and Andy Stanley to help you master the art and science of developing and leading healthy teams. Of course, the theme for LeaderCast this year is leading healthy teams. So if you go to Heneka Watkis-Porter.com, there is a 20% off. Yes, 20% off until the end of, I think it's the end of April. or somewhere in the middle of April. Visit HenecaWatkis-Porter.com and you can book your spot now. You don't want to miss it. We had it last year at the Jamaica Pegasus Hotel, and we had Leadercast Women in October at the Knutsford Court Hotel. So this year we're having Leadercast Kingston at the Knutsford Court Hotel. So book your spot now. We have an amazing lineup of speakers, as you've heard, and you can get your 20% off before that time expires. Remember, you were born to win, but to be a winner, you must plan to win, prepare to win, and expect to win. Walk good.